YieldMax just launched another new ETF, TSMY. Is it a good investment? Let's find out. This video is not financial advice, nor is it a recommendation. Please do your own due diligence before investing into anything. TSMY is part of a new batch of YieldMax ETFs that takes their original covered call strategy and adds a twist. When you invest your cash into TSMY, YieldMax puts that cash into US Treasuries and sometimes FGXXX, a mutual fund that holds cash and treasuries. Then they leverage those treasuries to sell a put contract for 1 to 6 months expiration at the money. They use the premium from that put to buy a call for the same strike, same expiration. Then they sell shorter expiration call contracts at a strike price 0 to 15% out of the money for expirations 1 month out or shorter. These shorter calls pay for the monthly distribution as well as the 0.99% expense ratio. Normally, this is where most YieldMax ETFs stop, but this one added something different. The prospectus on this latest batch of ETFs allows the fund managers to, at their own discretion, decide to switch from their usual strategy to a call spread strategy. This means they still sell the short calls, but they also buy another call at a higher strike price and same expiration. This additional purchase call is meant to allow TSMY to participate in more of the gains should the share price of TSM, the underlying stock, surge quickly. It also acts as a hedge to offset the losses on their sold calls going in the money. Like any YieldMax ETF, the strategy is only as good as their choice of underlying security. In this case, it's Taiwan Semiconductor, ticker symbol TSM. TSM is a major manufacturer of chips in Taiwan. They contribute so heavily to global supply of semiconductors that if China invaded Taiwan, there would be another global shortage of semiconductors. On one hand, this level of importance should be a moat for TSM, but the company and all its assets being right in the middle of what could be another major conflict adds an element of risk that cannot be ignored. While TSMY does not plan to hold any direct shares of TSM, it will be exposed to any of the downside risk from the share price crashing should their factories be destroyed. TSM does pay a quarterly dividend and currently has a dividend yield of 1.28%. While TSM is not a dividend aristocrat, it has managed to go without a major dividend cut since it switched from annual to quarterly dividend payouts in 2019. On both the weekly and daily charts, TSM appears to have relatively consistent growth notwithstanding the pullback in 2022. It does appear to have hit resistance at the moment. This does raise questions as to the timing of the launch of this and other YieldMax ETFs. Just like with YBIT, TSMY launched around what appears to be a top for the underlying stock. Considering these ETFs perform best when the underlying stock goes up at a slow, consistent pace, you would think they would have launched TSMY back in 2022 when TSM was around its lows. Why do you think they chose to launch TSMY now? Are you buying this ETF? Let us know in the comments below. If you like this video, you might also enjoy this one here on the screen. Subscribe to join the Cash Flow Club and hit the bell for notifications so you don't miss a single video.